thousands of customer complaints, a so-called notice from the regulator, and legacy giants crowding the EV space. What does it all mean for Ola Electric Mobility? Let's break it down. Ola Electric is in the business of designing, manufacturing and selling electric two-wheelers. A single robotized future factory in Tamil Nadu manages the manufacturing from plastics to the final assembly. Then their products are sold through their application website and more than 4,000 experience and service centers located across India. In financial year FY25, company did a revenue of 4,514 crores as compared to the revenue in financial year FY 2022 was 373 crores. So on the revenue side, the company has grown powered by the EV adoption in India. However, the key point to note here is that the company is still loss-making. Ola Electric Mobility was spun out of its parent company in 2017. The parent company is ANI Technologies, which is primarily into the ride-hailing business with the name of Ola Cabs. Post that, Ola Electric Mobility managed to raise $1.4 billion from the investors like Tiger Global, SoftBank, Temasek, Ratan Tata and Hyundai. In August last year, Ola Electric Mobility came with its IPO and they managed to raise 6,154 crores, out of which 5,500 crores was a fresh issue and the rest was secondary. The price band in the IPO was Rs 72 to Rs 76 per share. Post listing, due to initial investor euphoria, the stock spiked to Rs 156, but since then it has been falling drastically. Currently, the stock is hovering around 40 rupees per share, which is down 75% from its peak. That means that those investors who would have invested at the peak of 156 would have lost 75% of their money in this company. Currently, investor sentiment hinges on whether Ola can turn its story around. Talking about the industry size, India sells around 17 million two-wheelers a year, out of which in the last year 2024 the share of electrics was just 1.2 million, which comes to around a 6% market share in the overall two-wheeler space. India's EV adoption has been quite low as compared to other countries. For example, China is already above 75% electric in new urban scooters and Vietnam is at around 14%. The competition for Ola Electric Mobility comes from the likes of Ather, Bajaj with its Chetak model and TVS with its iQube model. And the competition is going to intensify further with Honda and Suzuki announcing their entry into electric two-wheelers. Last year for Ola Electric was filled with a lot of challenges. More than 10,000 complaints on motors, screens, software and repairs led to a so-called notice from the regulator in October 2024. There was extreme dissatisfaction from the customers, following which Ola planned to aggressively expand their service centers, which currently are more than 4,000 across India, to do the catch-up in terms of the quality of service. A key enabler of electric two-wheeler adoption is the FAME 2 subsidy given by the government. This subsidy can be understood as something like a fixed amount of rupees which the government pays to the manufacturer, which is Ola Electric, for every scooter sold. Now in June 2023, the government decided to reduce the subsidy drastically, which increased the sticker price or the selling price of the scooters of Ola, and due to that the sales plunged drastically of the whole industry, not just Ola Electric. Currently the subsidy is still there, so it's a hanging risk. When the government decided to cut down the existing subsidy too, this again lead to some increase in the selling price of the scooters, which again could hamper the EV adoption. Almost 80% of the cost of producing an electric two-wheeler goes into its battery, and currently most of the batteries are imported from China. Ola is in the process of setting up its cell Gigafactory, which would manufacture the battery cells in-house in Tamil Nadu. Ola is planning to start the production in this year itself. Now this would be a key thing to track, because if Ola is successfully able to do the battery production and at a cheaper cost, they would have a significant cost advantage as compared to their competitors who are still importing from China and other countries. Now talking about the financials, in FY25 revenue is down 19% year on year due to government cutting down on the subsidy and service issues faced by Ola and dissatisfaction dissatisfaction by the customers. Also, due to the entry of legacy giants into the electric two-wheeler space and intense price competition led to a decrease in market share of Ola Electric. Net loss in the October-December 2024 quarter was at 564 crores. So the net loss run rate for Ola Electric Mobility is around 2000 crores a year. In May 2025, Ola Electric managed to sold 15,000 units in that month. Now the company is guiding that they could break even at somewhere between 25,000 to 50,000 units. If they are able to gain some market share and grow their volume this year, they could easily reach 25,000 and they could easily get a EBITDA break even. The company has a high debt currently and they are also planning to raise an additional debt of 1700 crores because of the losses they are sustaining. Talking about the future outlook, the bull case scenario would be vertical integration of Ola could help them have an advantage over their competitors. Ola also announced that they are now making rare earth free motors, so it would reduce the dependence on rare earth minerals. The wide distribution that Ola has with more than 4,000 touch points can also come as a handy advantage. With their in-house R&D, Ola could reach 25 to 50,000 units a month to break even. Thus, these are the bull case scenarios. Coming to the bear case, subsidy dependence in a price sensitive market, because scooters is a price sensitive market and sub 1 lakh category is the majority part of the industry. Competitive intensity by new players entering and large losses could be a trouble thing for Ola's continued concern. Now, for an investor, key thing to track would be Vahan sales registration and Ola's market share, whether it's increasing or decreasing month on month. Second is the Gigafactory timing and cell production, whether production is starting on time and what is the amount of production that is happening there, whether Ola is successfully able to scale up the production with efficiency or not. The third thing to track would be subsidy and government take on it, whether they are further planning to keep the subsidy or they will decrease it and remove it altogether. And the fourth thing to track is competitive intensity. What are the new players entering, what are their offerings, and how is Ola Electric comparing to it. Now let me know in the comments whether you think Ola Electric is a falling knife or a turnaround story. Thank you.